What's going on, people?
Woo!
Here with another Forex Friday. Got a lot to go over, mostly because of the recent developments with the Fed and now this new jobs report. We'll get into it. But so far today, got Euro up pretty handedly, almost 2%. GBP USD up like 1%, 37 basis points. Basically, dollar took a nosedive after yesterday going up pretty significantly because of the hawkish tone of the Fed. So we'll talk about that in the jobs report, but let's just get into it.
My man!
So we're going to start things off with the DXY, and I got a shorter list today, but maybe I'll spend a little bit more time. We'll see.
Totally.
Also have the, where is it? My little UFO mouse. Ready to get it? All right, anyway.
Oh my god, who the hell cares?
Okay, so we have the DXY, like I said, took a pretty sizable dive right here. This is off of the jobs report. At least that's, what everybody is saying and what it seems like, because Jesus Christ.
You're a fucking idiot.
The jobs report came in better than expected, at least in terms of, like new hires, but the unemployment number rose to 3.7%. I believe it beat expectations of 3.6 or whatever it is. But anyway, the labor market softening is, at least from the market's perspective, reason for Powell to ease up on his policy, even though he explicitly said the day before on Wednesday, or was it the day before? Yeah, I think it was Wednesday. Whatever, doesn't matter. He said that the terminal rate is going to be higher, which means there are going to be more overall interest rates than originally anticipated. He literally said that. And people are fixating on them slowing down, or maybe the fact that the next meeting he does 50 or, just slows the pace. But in my opinion, that does not matter at all. He even said the pace doesn't matter. We might change the pace, but the terminal rate, the end result, is going to be higher than we anticipated, meaning more interest rates. So personally, I think this jobs thing is something to fade. I'd still be interested in going long dollar pairs. Not that this momentum can't continue in the short term, but so that's what explains this. And, the previous, Wednesday, this is this up move based off of Powell and what he said. So I think that direction is going to hold and consistent with that. So let's just map out the actual price action. Let me shut the fuck up about my macro stuff. So we had the high, we had a low. We're in this counter trend structure, right? Because a higher time frame, we're definitely still in this major bull run. So this is counter trend, and just based off of because we haven't confirmed this high, beating this or this one, to confirm that the counter trend is over. But at the same time, I think given what we've learned with Powell and everything, that is kind of the catalyst that'll drive this counter trend back to new highs. So I am identifying this right here. So we have this, making lower lows, lower highs, lower lows, and then we bust through this at least short-term high. And so this area right here in general is where we didn't continue to make a low, as in this structure, like this continuing to go down. We started this counter trend within the counter trend.
Whoa.
It doesn't really matter, but so we pushed higher right here in this area, and this is where we would have presumably been making a new low. So instead of making a new low, we started this making new highs. So this is the area of demand that I mapped out here, and you can see, actually let me get down to the lower time frame, and you can see basically this candle right here, that black candle right there, red candle, whatever, that is the area of demand. And we dipped down to this pretty perfectly. Looked like we weren't going to hit it, like maybe this was acting as the demand, but then I think this was during the FOMC meeting. We had just a lot of volatility. We dipped down into this demand and shot up. And so I wouldn't be surprised if this area of demand acts as demand again, and that's where we see this push to the eventual continuation to bust this high, this area of buy side liquidity right there. We already busted through this, and now we're retracing. But like I said earlier, I think that we're probably going to be making higher highs, higher lows. So at the very least, we would be having this be a low for a while. Maybe we trade all the way down into this area and then continue to eventually bust that. buy side liquidity, possibly, taking out these one by one, this one, and then eventually making an actual high, like higher time frame high. But I would be looking for some sort of accumulation in this area right here. If you're trying to play it really safe, I would base your stop off of the absolute low, just because structurally speaking, that is the safest bet. It makes the most sense. Now, just given how big this range is here, it maybe won't be ideal if you're doing shorter time frame trades with lower targets and basing your stop and validation level off the absolute low. Might be hard to get a good risk to reward. But if you're doing this higher time frame, basing it off this kind of higher time frame low and shooting for, I would maybe just set with this one as the first target, just because there's a pretty big gap. But I do like that these are equal levels, so we have a lot of liquidity built up in here. Potential inefficiency, it was never filled from this drop here. So I wouldn't be surprised if we just dip into that and then maybe retrace a little bit. So that would be my initial target. Although I suppose technically maybe just this high would be my initial target. But I still think eventually we're going to go here pretty soon. So I'd probably put it there. Nevertheless, entry, a little tricky. Now this area of demand is already acted like demand, so I might just use that as my entry. But if you feel like it's, I don't know. I would go with this demand. Realistically. The only thing that bothers me or that gives me reservations is that we've already touched it, dipped into it again. I know this is a pretty crazy wick that just shot up aggressively, so that is a good sign that there is a lot of liquidity resting in this area. So I wouldn't be surprised if it does work again. You could even play off of this level right here as like a sell side liquidity. You run the liquidity on this side deeper into the zone and then shoot up. Or maybe there really just is that much liquidity, buy orders left over in here where it just dips, like into the top of the zone. So you could do that to play it safe in terms of the entry, but the risk to reward, like I mentioned earlier, is going to be a little bit challenging if you're basing it off of this absolute invalidation level. Obviously, you can move it up because if this is the demand, it's probably not going to trade too much lower than this. So this can be your stop loss in this general region, but to be absolutely safe, I would probably play it there. Still, about a 3-hour trade, which isn't bad.
Nice.
But anyway, that is what I'm looking for. I guess if you're trying to play a short-term play in the medium term, I would be eyeing this area of supply. We were making higher highs, higher lows, made the ultimate high from this low right here, this area demand, pushed to that high, and then we came back in. That demand did not hold, and we just busted through. So I wouldn't be surprised in the slightest if that demand turns supply. We come back into this level and then continue to the more higher time frame demand levels in this region right here. And then obviously the continuation higher, because as long as the Fed is remaining this hawkish and Powell saying they're going to raise rates further, ultimately in the end, terminal rate further than they originally anticipated, I can't imagine why the dollar wouldn't continue this uptrend that it's been in for so long, because the factors creating that uptrend haven't changed. You know what I mean?
Yeah.
All right, that's enough DXY. Let's transition to Euro USD. Move to the 4-hour, higher time frame perspective. So always identify, got the macro trend, right? We're headed south. There's no reason to believe that this trend has really shifted. You can see we have this area of supply right here. We had this consolidation, expanded the range to the bottom, expanded the range to the top, and then had a pretty precipitous drop right here. We haven't really fully traded into this. I suppose you could say that we did if you base it off of like the total buy candles of this. I mean, it's a 4-hour chart. Maybe it's a little different on the 1 hour. I suppose you could like tighten it a little bit, but basically the buy candles to the top of the buy candles. So this whole region, I suppose you could say, if you put it all the way down there, we did trade just barely into it. Now we still potentially have more inefficiency in this general area, the zone, leading up to this high to fill. So I would be open to the idea that price Euro USD trades a little bit higher to bust this buy side liquidity. And then land somewhere in this supply zone before continuing lower. But I'm also trying to eye this area right here, because we had this. Zoom in a little bit. So this is the higher time frame supply that we traded into just barely. Didn't see a strong reaction. It was more of a trickle down, which is not something that kind of leads me to believe that it's more likely that price will trade above and bust that buy side liquidity. Because if there was a ton of orders really hitting this, it'd be more, like wicks and just a strong reaction. But nevertheless, I still would be eyeing this area. So we were making higher highs, higher lows, higher highs, higher lows, higher highs, higher low, higher high, and then we made a low and failed to make the high. So this area right here, you could say is supply. I'd probably base it more off of this because this is the demand that flips supply. We just crashed through, failing to make another higher low or higher high, this being the higher high. So this area right here, now you can see that price already, like this wick right here, kind of played into that area. This is not something that was, it wasn't as obvious to me because I was debating this zone or this zone. So usually when it's unclear, I'll just play the top zone to play it safe. So didn't get anything for this wick, but now we're headed back up, and I wouldn't be surprised if we saw price bust through this buy side liquidity right here. You can't really see it because of the zone, but this line, basically that top, and into what I believe was the supply zone. Now I would play you could play this as the high, like your stop level. Not going to trade a higher or create a higher high. So somewhere in this area, you'd get a good entry for a continuation down. But given I am still suspicious on whether or not price will trade back into fill all of this higher time frame supply, I'm trying to, or I want to have an order where my stop treats this as the real invalidation level, and then targeting just a higher time frame, lower low, all the way down here. Now the entry, I like to do at least a 3-hour trade, so I just moved my entry as close as I could while maintaining those levels. Doesn't mean I'm going to get a fill, but I feel comfortable with this area as a good entry because it's playing off of this area supply, but also I wouldn't get stopped out if it ended up trading even higher into this higher time frame supply and filling all this previous inefficiency, because as far as I'm concerned, that is the perfectly consistent with price. Had this high, and you just trade all the way up into this area to really fill the rest of this, and then trading back down to a lower low. Right?
Totally.
Okay, so that is Euro USD in a nutshell. We'll just go ahead and transition to USD JPY. Get back to the 4-hour. This right here, this large red candle, was the intervention right here, where the Bank of Japan spent a record amount, like $42.8 billion, defending the currency by what I would presume would be selling their treasury holdings, because they are one of the largest holders of treasuries. They sell their treasury holdings and basically buy yen with those dollars, so it puts downward pressure on the USD, and upward pressure on the yen.
Right.
Let me get rid of this. So this was the big move, and we saw a similar thing back here, right? So both these were the interventions. I mean, remarkably similar price structure, you can kind of tell. But as long as nothing changes in the macro, in the in terms of the Bank of Japan's policy stance on their interest rates, and the United States stance on its interest rates, they're going in complete opposite directions. Kind of, I guess, one's stagnant, but the Fed is getting even more aggressive recently. So I don't see why we're not going to see anything, or why we wouldn't see, what the hell just popped up? Why we wouldn't see a continuation like this, right? Even if it's just a trickle up, because that tends to be what's happening with USD JPY to the upside. It's just a slow burn up, and then these periodic spurts of volatility to the downside because of some yen intervention from the Bank of Japan or whatever macro development. But I think I personally think that this is going to be the low for a while. Now it's possible we maybe run that liquidity and then continue higher. I'd be open to that too. But bottom line, I think that the USD JPY is going to be headed higher, probably back to 150 unless something really changes with either of the central banks. So I'm viewing this as the potential area of demand. Now it's not as obvious because we haven't really confirmed the trend. I would have preferred to see dollar yen take out some of this buy side liquidity, then come down into the demand and then continue higher. But I still do like this as a trade idea. Just taking it all the way to the top. First target obviously could be this area, because I wouldn't be surprised if we saw a little bit of a pullback after running that liquidity, and then maybe into demand again, and then continuing higher. But yeah, so that's in a nutshell what I'm looking at. I wouldn't be surprised if the if we really run, like I said, all the way down into either of these areas to run some liquidity on the sell side. But given this is, it looks like a pretty strong area of demand. Let me get down to the 1 hour. Actually, oops. Get out of here.
And we say bye-bye.
All right, let's get down to the 1 hour. So you can see we were making lows, right? This is the counter trend, the intervention, and then we started making high, low, I guess, whatever, it doesn't really matter. High, low, and then we made a new high right here. Or I guess you could actually say it's right here, right? So this was the high, and then we failed to make a new lower low. So that is a shift in structure, right? We have these higher or lower lows, lower highs, lower low, and this was a lower high if you're basing it off of this, but we made a higher low. So breaking that structure and then continued higher to definitely make new highs right here. So given that, that's why I identified this as the area of demand, right? So this is where structure changed, where demand was, had entered the market, and we started changing the structure to make higher highs, higher lows, at least in the short term. Obviously, we could still make a lower low right now, but that's why I'm looking at this area right now. We had this pretty crazy wick. Definitely shows that there is a lot of liquidity in here, and we already kind of ran. I guess these are really like equal lows. Now that does give me a little bit of concern, because whenever you have like equal levels, that is a buildup of liquidity right below, because you just got tons of stop losses operating in this general region. So maybe if we get down to the 15-minute, where is, yeah, you could see just a run of these lows right here, and then in that case I would just base your stop loss off the absolute low, just to play it safe, which would just look like that. Now, the reason I had it up there was just because I was trying to base it off of this demand zone, and this is not an ideal risk to reward. I suppose in general you could always sacrifice your entry. That's usually my rule of thumb. Yeah, so it's not terrible, and that's the safer bet, I would think, playing it off of this absolute low. But yeah, in general, still looking for longs, and I believe this right here, this demand zone is consistent with a shift in structure, hence this breaking these highs right here, right? So I'm assuming that we're going to be making higher lows off of this level in this area of demand, and then continuing higher to, at the very least, this area of buy side liquidity, and then second target all the way to a new high, so long as the central bank stuff stays as is, which I expect it to. All right, let me clear this off real quick. Let's transition to the next pair, GBP USD. All right, so we have this area of supply that we dipped into, right? So let me tighten this up a little bit.
That's what she said.
Yeah, so we have this area of supply based off of these last buy candles right here. So this big buy candle right there up to the top. What is going on in my computer? And you can see we perfectly traded into that right here, right? So we have this as the high, we made a low down here, and we traded back up to make a lower high, and now we're headed back at least lower as part of this counter trend, right? Because we've been in this upward trend and we haven't made a lower low yet. So this area of demand is, it's an area of demand so far, and we're seeing this sizable reaction, and that's consistent with these higher highs, higher low, higher high, higher low. So this was the low area of demand off of which we're bouncing right now. Maybe if you can get down to the hourly chart, you can see a little bit better. Yeah, so why is this, the area of demand and maybe not this? I'll tell you. So we have this high, we have this low. So we're in this counter trend, uptrend, this way, right? And then we're having a counter trend within the counter trend going down, and we have a high, a lower high, higher low. Oh, wait, no, what am I saying? A high, a lower low, lower high, lower low, lower high, lower low, and then we start pushing up, and we don't make a low. So this is the sell candle, right? We don't make a low. Instead, we push higher to break structure right here. Grab this buy side liquidity, break structure, and we built up even more liquidity with these levels right here, right? So you could say there's a lot of sell side liquidity and imbalance in this area, and so we're trading into that right now. Now this reaction right here was very relieving, I suppose. This initial reaction, not so much, but we are trading into demand, and we are seeing this reaction. Now for a shorter term time, you could get another dip into here, and then in which case I would just be targeting the next area of supply, more likely, just depending on really how strong the dollar ends up being, you know, if at all, I suppose. I would just target this buy side liquidity first. Get rid of this. So like I said, you could get maybe one more dip into demand, or a dip into this lower time frame demand zone, because again we had a high, whoops, we have a high, we have a low, make it kind of like equal highs, but we're making lows, and I would prefer to see this and then maybe a return, because that shows that we are breaking short-term structure potentially by making a slightly higher high, and then maybe we dip down into because you know, this is the low point, we moved up, failed to make a low, so this is the area of demand, because instead of making a lower low, we made a higher high, you know, if it gets above this level, and then you want to see a pullback into that area of demand before continuation to the higher time frame supply. That doesn't mean we're going to get there. Like I said, it really depends on just how weak the dollar or strong the dollar ends up being. But I would like to see it take out this buy side liquidity, you know, if it does get this high. So push above here without making a higher high, and then pushing lower. And you could, if you really want to play it safe, base your stop off of this high. But realistically, I think this is the high you could base it off of. So just a stop like this, and then entry at the buy side liquidity. That's my ideal point. I would like to, you know, get retail stops. I enter right when they get stopped out. They're my entrance liquidity.
Little bitch.
But yeah, basically something like this. Now, and if you want to take it long, off of a push through this buy side liquidity, and then retracement into this lower time frame demand, and then a push higher, and then in which case you short it. So long on the way up, short on the way down. That's, you know, easier said than done.
Totally.
But yeah, those are my general ideas on the British pound dollar pair right now. Now let's transition to Euro GBP. So if we look back in time, we can see that we had this consolidation, right? Expansion to the downside, and then expansion to the upside. So we expand the range on both sides and then continue down. And we talk about this a lot, but that is basically, oh, oops, wrong one. Did it pop up? Oh, no, it didn't. Here, I'll just throw it over here. Yeah, so that's this right here. This general market structure, contraction, expansion of the range to both sides, and then a continuation, the profit taking part of the trend. So that's what we saw here, and we created supply in this expansion that we have not tested or come back into yet, right? We made this lower high and a lower low, and now we busted this buy side liquidity right here, right? So we made a higher high off of this level, but we still haven't traded into this higher time frame supply level. So I'm eyeing that very closely. Now we could just, at least the way it's looking right now, we just busted the buy side liquidity, and then we are heading lower, possibly into demand or even all the way down. So you could play this as a range deviation play. I would be watching to see at least one more push higher and maybe try to enter on the push, but I would probably confirm the deviation. Whoops, I did the wrong one. So you could play just one more test, like I said, entering right and around the top, target some buy side liquidity, and then just base it kind of open-ended. Like I said, I wouldn't really take this trade, but as a deviation trade, it's not a bad idea just because we just busted that buy side liquidity. We've had a number of wicks, you know, and candle closes below this level now, but I would like to see some sort of retracement down, a push back up again, and one more rejection where we kind of see something similar to this, but over here. And ideally even bust these to make like another, like a double top basically, but slightly push higher to grab that buy side liquidity that built up right here now off of, you know, all the retail people that are shorting this level right now with their stops right there at the high. So I would love to see that liquidity run. And then possibly get all the way into that, into that higher time frame demand. So because it's so close, you know, busting that liquidity one more time, and it's so close to the supply zone. That's where I would like to base the entry off of. But yeah, so stop up here all the way to high, and then targeting higher time frame lows all the way down. But again, targets are always along the way are always the areas of buy side liquidity. I would like to see, you know, like I said, something like this, maybe all the way into the zone perfectly, and then a push down here to bust this buy side liquidity, probably some sort of retracement into supply over here, and then a push down even more, grab more liquidity down, fill this inefficiency, and then who knows, maybe we catch a bid in this demand and then continue higher. But those are the targets along the way. But the overall trade idea would be this higher time frame supply, taking it down all the way to higher time frame lower lows, because why fight the trend, right? We're assuming the trend is going to continue, and we have clearly been in a higher time frame downtrend, making highs, lower high, and then this right here would be a lower high in this area, and then we had lower low, lower low, lower low. So we're looking for one more lower low into I mean, it doesn't really matter, but this is a quasi, I guess, higher time frame demand zone. Either way, I would be targeting the sell side liquidity at the lower low. But yeah, those are my ideas for Euro GBP. Let's transition to GBP Swiss franc. We're almost done, guys. Almost there. Okay, so this is where it goes. 4-hour chart. Actually, let's go to the daily. Looks a little bit better. All right, so we had this area of supply, and it was really more of a range, right? We were just range trading for a while, and then we had this drop, kind of retested it, you know, we got a little bit of pull liquidity from here, but we just busted that buy side liquidity, right? So you could say this, let me zoom in a little bit. So you got these levels of you know, relatively equal highs over there, and we you know, made this low, and we pushed back up and just broke that, bought the orders, and we or hit the sell orders, and now have seen a sizable reaction down. So I do like that, especially because it went into this area supply, and I believe I'm actually in this trade right now. So I saw a price entering this higher time frame supply zone. You know, we didn't really retest this level. It's not as extreme of a drop, though. You have to keep in mind this is a daily chart. So if we go down a little bit more, you can see we had this range right here, right? So we had these lows, these general highs, generally equal highs, and then we broke out of that range, and we never fully really retested it. I mean, you could say that was kind of a retest, but then we just built up a lot of liquidity in this, you know, in this area, right? You could even say this is the lower time frame area of supply, you know, just because it's this big red candle that led down. But I'm not really, this is a higher time frame trade, so I'm not trying to base it off of a, you know, a tiny little supply zone.
And we say bye-bye.
But anyway, yeah, so we built up a little bit of liquidity. Not, again, not the prettiest signal, I suppose, but we ran those highs right here into supply, and we deviated back down below this level right here. So this kind of short-term swing high. And so I just basically waited for price to dip back below, and then I got in on this wick entry right here, just a retest of that previous high, invalidation, this level in the supply zone. And then target is the sell side liquidity on this side, so I'm just hoping for a little bit more of a dip down here. Now I could see us run all this liquidity and fill some of this imbalance right here to gather orders, or get filled by some orders in this area of demand. Now I think this whole area is really fair game, just because this is this right here, the really sizable sell candle, which is often a sign of, institutions, large players kind of manipulating price or pushing it down so they can bring it back up. So I would realistically probably focus more on that whole candle for an entry long, which would just look like this. I don't think the risk to reward would be ideal. I guess it's not terrible actually. It depends if you base it off of. Yeah, tricky, I guess, because if you're basing it off the actual low, which is always the safest approach, it is technically all the way down there, that green candle. And then if you think it's going to make another high, so because we are in this counter trend, or this because higher time frame downtrend, but this is the counter trend, right? So possibly we make a new high. So I suppose the first target would just be like right there. I'm probably not going to take this just because I am not particularly bullish on the British pound, and we also traded into higher time frame supply, so I am not anticipating a push higher unless we really just come all the way back into this zone for one last pull of liquidity. Could totally happen, and then we head lower. But I think I'm trying to go with the trend, and we traded into higher time frame supply. We had a sizable reaction, so I'm not going to be necessarily looking to catch knives, but still, even if we're not going to make a higher high, this could easily be the area of demand off of which we retrace into some level here to make a lower high, and then continue as such all the way down to presumably a lower low, maybe not. This was a pretty aggressive reaction, meaning there's a lot of buyers that really stepped in right here, so this area of demand I think could act as a short-term low. Price trades down into here and then maybe continues higher. But in the short term, definitely at least thinking price gets down to the sell side liquidity, if not all the way down to here. It was kind of complicated. Let me do that again with all these things. So at the very least, I think price is at least going to trade down through the sell side liquidity, and then if not, down to this higher time frame demand zone, where we may or may not see a reaction to then maybe make an ultimate high. But either way, we'll cross that bridge when we get there.
My man!
Okay, so let's transition to USD CAD. We got the 4 hour. All right, so we have this. We got a high, we got lows, we got highs, lows, high, and actually I did the wrong order. So this was the low, right? And we made a lower high again off of like this area, and then we made a higher low, right? So we didn't make a lower low right here. So this area is our area of demand. So we already busted through that. Now that is not a good sign for longs, right? Because we are still in this downtrend, and we just made a lower low. So there's no reason really to be thinking that we're going to be making another high, even though this is a dollar pair. That is my bias. I'm basing this off a structure. So we just made this lower low, which means I would probably be looking for a sell, maybe all the way up into this level, because this is part of the counter trend, right? So we made this low, this higher low, this higher low, this higher low, this ultimate high, and then we failed to make another higher high. So this whole area right here, really, you could base it off of either one or even just this larger supply level, but this region right here is where our area of demand kind of flips supply. We failed to make, or we made a higher high, but we have made a much lower low, and to this point at least, I mean, not that, I guess it's out of the question, could obviously go all the way up there, but doesn't look like we're going to be making a higher high anytime soon. We'll probably have even if we get all the way up to here. So this is the area of supply I'm looking at, and I don't like this because it's such a big range, and if you're trying to base it off of like this actual absolute stop level, the risk to reward, it just doesn't really make sense. But I still, I guess one thing I want to point out is that sometimes you're going to have if you are like a macro oriented trader at all, you're going to have your macro ideas kind of conflict with your technical analysis or trading. And I think you really need to separate the two. Like, don't worry about what your macro thing is. Trade the whatever it is. And right now we made a lower low. So even though I am bullish on the dollar, we made a lower low, and we are part of this still downtrend, right? This counter trend, even though the larger trend is up. So I think there is still room potentially for the dollar, at least dollar CAD pair, to head down, maybe bust this sell side liquidity into this higher time frame demand before continuing higher. So that's also part of the reason why I'm interested in taking sells potentially off of this level. Again, technically basing it off of this to not make a higher high. So in the medium term, I will be looking for pullbacks into this area to potentially take short to a new short-term lower low, and take out this sell side liquidity, and possibly actually get rid of some of this. So take out this sell side liquidity, and then possibly this sell side liquidity. Hopefully dip into this demand, fill in a little bit of this imbalance, and then continue higher. Because again, the Fed is raising rates aggressively, more aggressively than really any other central bank. I believe the Bank of Canada already went back down to 50 basis point hikes. I'm not 100% sure on that, but I think they already went down a little bit. So that interest rate differential is already being driven even wider. And another point that is really crucial to keep in mind is the U.S. can handle higher rates longer than any of these other economies. Just being having the global reserve currency and everybody creating this natural demand for the dollar, in general, the U.S. economy is just more suited for handling that. Not well suited. I mean, terrible. They're gonna, be consumed by their debt. But on a relative basis, the United States is going to be better off handling those higher rates for longer. And we already saw the gilt market blow up, like in UK, and Bank of Japan is already having their problems. All these other foreign economies, in my opinion, are going to break first or have issues first. So I think that even though technically, technical analysis wise, the Canadian dollar looks like it's going to be strengthening against the dollar, maybe in the short term, down into these lower lows in demand, I don't see why longer term we're not going to head higher. So I still would be interested in taking buys at this level. But again, in the short term, I'm mostly considering this pullback into this area of supply for a continuation of this trend lower. Maybe then we make a higher low and then just push higher from there. But yeah, so short term bearish just because we made a lower low and broke structure, or continued structure, sorry. But higher time frame, hoping for a pullback into this area of demand for ultimately at least a run of this liquidity to fill some of this imbalance, or even all the way up to a new high. Again, if the Fed is really as hawkish as they're making it out to be, and they continue this, and I don't see Canada being able to keep up with the pace of the rate hikes of the Fed. I don't really see why we're not going to see this again higher time frame trend up continue, because the factors contributing to that higher time frame trend have not changed.
Totally.
Okay, well, I'm tapering off, but we got one more left, and it's going to be Bitcoin. It's exciting, so let's go ahead and do that. Now, crypto's been interesting. We had a big boost today. Ran this right here, this buy side liquidity. Had a pretty meaningful reaction. I mean, this wick, and then we're shooting down right now. We haven't yet traded into any, actually, did we? We might have perfectly got into this area right here. So if you're basing your supply, now this is too big of a zone. I would never trade off of a demand or supply zone of that size, just because it makes it impossible to have a reasonable risk to reward. So even though this zone, you could technically, maybe if you go to the 8 hour, it makes more sense. Yeah, well, mostly because we have this is the imbalance, right? So we had the shoot up, and we had kind of like a trickle staircase, so nothing super crazy, and then this aggressive move down. So you could base it off of that. I would probably go to the lower time frame to, or where do we go? I'd probably do it to base it off of the buy candles leading to that the sell-off on a lower time frame, just because it makes the trade easier risk to reward wise. But anyways, regardless, we never traded into this higher time frame supply, unless you kind of consider this level, in which case we did. So that is potentially a good sign, because if you are basing it off of that, the 4-hour chart makes more sense. If you are basing your supply level off of this, this imbalance right here, then we did trade into it, and we saw the reaction. In addition to busting this short-term buy-side liquidity, so I think we're going to be headed lower. I mean, just because I think as the Fed raises rates and people come to terms with that, risk assets, and unfortunately, Bitcoin is part of that, even though I like to disagree that it shouldn't be. Risk assets are probably going to get hurt. I think crypto in general is probably going to be headed lower. Maybe not to like lower lows, higher time frame, but I am bearish. I think I'm actually in an ETH trade right now, similar to this, not Bitcoin, but it was based off of this. Again, whoops, wrong order. It was based off of running these highs, just a short term, and then targeting this sell side liquidity, because you can see we still have a lot of imbalance left right here from this big push, and we've built up a fair amount of retail liquidity from these levels right here. So we have this low, relatively equal levels right here, right? So I would love to see price now just bust to the downside, but at the same time, and so that's why I'm targeting this level, because at the same time, this is kind of like a contraction, and we expanded the range to the upside, and now looking to expand the range to the downside, and then possibly continue the uptrend. I mean, who knows? That's why I'm really only targeting this level, because just with everything going on right now, you never know. I mean, a jobs report comes out and all of a sudden the market's bullish again a day after Powell does this, so you can't really predict these things. So I'm trying to keep my targets more short term. Either way, the risk to reward is good, but yeah, so basically just playing that buy side liquidity. You run it, expand the range to the top, and then you run the sell side liquidity, get all those retail traders the fuck out of there,
And we say bye-bye.
and then a continuation of the trend, possibly just a retest and then push back below. But this is the trade right here that I am interested in. You could play one more push of the, actually let me get rid of some of these, I guess, to give you a little bit better idea of what you could be looking for right now. So I would consider, if you're not already in this trade or whatever, just base it off of that high. Yeah, this risk to reward sucks. I would never do that. Yeah, well, anyway, you get the idea though. The important part is the strategy. So moral of the story, we had this contraction, expansion of the top side, and now I'm looking for the expansion of the downside, but also playing off of just running this liquidity, and then running this liquidity, which is basically what that expansion is.
Totally.
Now, how far is this? Just one more thing before I wrap this up. Yeah, that's not crazy far, so I still, 5.5% roughly. So I still would be eyeing this level of supply, maybe even see Bitcoin run that high if we get some real crazy bullish news. Wouldn't hold your breath though, because we do have, a fair amount of imbalance, and it's always nice to see like a little deviation from here. In which case, so say price goes up here, deviates, then I would just be looking for confirmation. So you deviate from the this range, I guess, or just run the buy side liquidity right here from all the stops around this high. Oops. And then you deviate back below that high, this green line right here, and you just look for continuation of that trend. Just confirmation that it's a deviation and we're not pushing to make higher highs. Again, probably not going to see that, but just keep that in mind for the deviation trade. But yeah, I think that does it for today, unfortunately. But as always, I hope that helped. So stay happy, humble, and most importantly, solvent. And I'll catch you all next week.
And we say bye-bye.